All right. Let's get this party going. Share. Okay. Perfect. Yeah, so basically what we're going to talk about is gaps, right? Like, why do gaps happen, right? Like, what makes gaps happen? Why, like, if you can trade gaps or not, if you can basically say that, okay, if this gap is going to get filled or it's just going to reject it, right? So those are very important things. I think people don't really understand the basic concept of gaps and why are gaps happening based on a technical perspective, right? So that's what we're going to talk about. And then what we're going to talk about is losses, right? Like, what happens when you take losses, right? How can you actually learn from losses? Because the thing is, most people don't, like, okay, we're going to talk about losses, okay? Losses and gaps. So welcome everyone from groups far and wide in the Forex community. We have people from all over the place here in Twitch, 238 right now. I think it's going to increase to, like, maybe, oh, well, if it goes to 200, perfect. We've broken the record today, right? Awesome. Okay, gaps. How do we see price move, right? Do you really know why price moves? Like, or like, how can you see the price move, right? It's the broker. So what happens is, you have the broker, right? You have the broker, and then you have your MT4. Now this is just going to be very, very simple explanation, really, really easy to, like, very simple to understand, basically, right? So you have the broker allows you to see the price, right? So you see the price when the broker is open, you're seeing the price moves, like price moves, like when you see the candles and all that stuff, right? But when is the broker closed? The broker are closed over the weekends, right? So when the broker is closed over the weekends, what happens to the price? Like, why does it gap? Why does the price gap over the weekend? Because it's moving over the weekend, and the only reason you don't see that is that because the broker is closed, right? When a broker is closed, you can't see price move, but price is moving over the weekend. Fundamental events are happening, right? Some news, like when you see Brexit news over the weekend, or you see some like wild stuff happening over the weekend. When on Sunday markets open, you see that there's a gap, right? It's because price moved over the weekend. So let's take this for an example, right? Let's take this for example. Let's say that price was moving like this, came up like this, and it, like, on the weekend, on market close right over here, right? So now weekend came along, and something happened. Let's say this is USD/JPY, right? Let's say this is USD/JPY, and Trump tweeted over the weekend something about, Russia, and that caused the dollar to go down, right? So when the market opens, you see USD/JPY gap down right over here, like price starts from this point, right? So over the weekend, this news caused the US dollar to go down. That's why it gapped down. That's why the price moved down. Over the weekend, price moved down. We didn't see it because the brokers closed. That's why sometimes, when you see these really high volatile news, and then you look on the 1 minute, you're like, holy fuck, this thing gapped down. Oh my God, the news was so bad. Same thing happens here, right? When you see gaps on news, what that means is that price moved way too fast for the broker to realize that, oh shit, okay, price moved here, okay, we gotta put this price on, right? That's why you see those small gaps like on the 1 minute. But when you're on the weekend, the broker's closed, like they don't have, like, there's no price movement. So that's why you see the gaps, right? Especially when there's Brexit. Now, when you see Brexit news happening on the normal, daily conditions of the market, it moves a lot. So that's why over the weekend, when there is some Brexit news, when the market opens back again, you see that huge gap, right? So that's why gaps happen. Let's see here. Let's see. So you think MT5 is better to use than MT4? That's totally up to you. You need to use both to really say that, like, what the fuck kind of question is that? You just gotta try it. Anyway, so we're gonna move on here. Let's move on here. Okay, so how do we know if gaps will get filled or not, right? How do we know if gaps will get filled or not? So that is a very, very interesting question. What I want to say here is, I actually want to, let's take these notes. I hope you guys are taking notes, but you got to take these notes too, right? You got to take these notes too, because the thing is, when you have a gap, what you need to see is where is your higher time frame support resistance, right? That's what you need to see. Because when you have a gap on a chart, I don't have an example here right now. If I do get an example of the chart, it's going to take some time. Actually, it's okay. I'm not getting an example. All right, perfect. So let me just draw the things. Okay, so let's say you have the 4-hour chart, right? Let's say you have the 4-hour chart, and then the chart is moving something like this, like this, like this, and then you have a gap, right? And let's say price gaps, price. So this is where the market closes. This is the 4-hour chart. Okay, remember. So this is where the market closes, and then price gaps up over here, right? So price gaps up over here. So now we have a gap. So now what you're going to do is you're going to look at the higher time frame whenever you see a gap, and you're going to see that, okay, where was the most recent support or resistance? Right? That's the first thing you're going to do. Step one, you will identify nearest support and resistance. Okay? So what you're going to say is, okay, if it gapped from the bottom up, you're looking for the nearest support. Make sense? So you look to see, okay, well, okay, this is probably support, right? You can say, okay, this is probably support right over here. Because look what happened here, right? Price came down, it made a support, bounced up, whatever, came down. It should have done a retest, but like whatever, it came down for the sake of simplicity. It went up and then market closed, right? Market closed, and then you have Saturday and Sunday, right? Saturday happened, Sunday happened, some news came out, and then price was moving over the weekend. So you're just visualizing price move over the weekend, right? And when the market opened, you have a gap right here. Price came up right over here. So what do you think? What are the chances that this gap is going to get filled? What are the chances this gap is going to get filled? I think there's a less chance this gap is going to get filled, because this is a 4-hour chart and you have support right over here. So even if price comes down, it's going to bounce from it, because this is going to be your first touch on support, right? Maybe, hey, an hour or two later, it can like break it down and go fill the gap, right? But you got to look at the higher time frame support resistances. No, there's a question. Would you not mark wherever the price gap to as a zone? No, because that's where the market closed. It's not like, because let's say if price is in the middle of a zone and the market closes, that's not going to be the zone, because the market closed when price was not at a zone, right? Here, the fucking market closed when price was not at a zone. Makes sense? So that's why this gap is not going to get filled. Because this is where the market closed, you got support, and then you got this support here again. So now this support, it becomes resistance if price is moving up, correct? I hope everyone says, yeah, correct, because that makes sense. Because if price will go up, you will say, okay, it's coming up, it's going to do it's going to, support, This one will turn resistance, and then we're going to head down. So now, when price has gapped up, that means it has broken this support. It has broken this support right here. So when it comes down from the top, like after it gapped, it's probably gonna bounce. Because look at this. This was like price moving over the weekend, it gapped up. Right? So now this becomes support, went up. So if there's like more momentum or whatever, something happens, it will break down and fill the gap. So this is the instance where gaps are not going to get filled. Makes sense? Like I wouldn't really recommend it. So now let's look at how gaps are going to get filled. Makes sense? So why will a gap get filled? Right? So some people are talking about how GJ went up to resistance on Sunday and then it shot back down, right? So what happened? Price was here, it made a support on the 1 hour. This is GJ 1 hour, right? And price gapped all the way down here, you know? So now you got this support turn resistance. It came up, it fucking tapped it and went back down. Because whatever happened, gaps, news, whatever, right? Price will always respect the higher time frame. What's that called? Zone. High time frame zone. Price will always respect the high time frame zone. And if you guys aren't making notes, I don't know what the fuck you're doing. Because if I was you, I would be making notes. Because some people, they're very impatient. They want to trade gaps, and then they trade gaps. So sometimes they get fucked. Sometimes they don't get fucked. How does the market move on the weekend when it's closed? That's a very good question. How does the market move over the weekend when it's closed? Because the market's moving because things are happening in the world, right? And whatever happens in the world, that affects price. That's what happens. So this is going to be recorded. It's going to be on Twitch too, right? So whatever happens in the world, it affects price. And when price is moving. Price is moving. That's why. Okay, let's go to the next slide here. Let's see what next slide we have. Oh, for some reason we have a blank screen. Okay, perfect. So that was the end. Yeah, so Ted said that the central banks are closed. So that was the end of the gaps section. So now we're going to talk about why gaps can we get filled, right? Why gaps can we get filled? So we got, that's not a straight line. So let's say we have support, we have resistance, right? And this is your 4-hour chart. This is your 4-hour chart. So price came in, did this little dance, went up right here, came down, and then it stopped, right? It stopped, and what happened was, now this is where the market closed, right? The market closed. So if this is a 4-hour chart, these bumps, these are on the 1 hour. Make sense? These are on the 1 hour. So now what you're saying is that, okay, so now price opened somewhere here. Over the weekend, price opened somewhere here. This gap was, let's say, 10, 12 pips, right? So now what you're doing is you're like saying, okay, perfect. So this is what happened. So now you look left and you see this resistance area, which becomes support. So will this gap get filled? First of all, I don't recommend trading gaps anyway because fucking the spreads are wild. So I don't recommend that at all. Yeah, so this gap is going to get filled because now price is at support. Price gap down and gap down at like 1 hour or 4 hour support. And, there are higher chances. It's not like it's going to 100% get filled, but there are like higher chances that it's going to go back up and potentially might go back up here too. Yeah, the spreads are crazy. There's no reason for you to trade gaps. sense? So now, we're going to go to the fun part. The fun part is how to analyze losses. I was actually very excited to talk about this. Like, so fucking excited, man. I made these slides 15 minutes before the webinar. So, I was just so excited about this. Like around 6 a.m. Eastern to 6:30 a.m. Eastern is when the spreads get back to normal. So that's best. So, okay, how to analyze losses? Everybody takes losses. 90% people here take losses. And you think you're doing things about those losses. Taking extra courses or whatever, but you're not doing anything. How to handle losses, right? So I want 1 or 2 word answers. 1 or 2 word answers. How do you guys handle losses? 2 or 3. 2 or 3 word answers. Oh yeah, some cry. Okay. Drink, reevaluate. Oh, treat it as an expense. Okay, perfect. A lesson. Yeah, a lesson. But like, how do you learn that lesson? How do you make sure that lesson doesn't happen? Suicide. Oh, smoke a joint. Perfect. That's what I do. Walk away. Journaling. Perfect. Journaling. Reanalyzing why you took that. Yeah, that's interesting. Reanalyzing why that. Those are a lot of words, man. How could you turn it into a win next time? Yep. Perfect. Cutting losses is key. Cutting losses is key, but like, how do you really cut your losses? How do you make sure these losses don't happen? Okay. So let's move on. Let's see this. How do you make sure these losses don't happen? How do you? Okay, so what is a loss? A loss is not because you didn't know what happened. A loss is basically something that you didn't see, right? Something that you didn't take into consideration before you took a trade, right? There's always something, right? And how does a loss get worse? Right? The only reason the loss is going to get worse is that if you have a predetermined risk, right? So let's say that so this happens to most people, right? Most people. This happens to most people that if you take a sell, right? If you take a sell, your stop is like 10 pips, price starts to go up, and then you see an imaginary zone, right? Your mind can play tricks. You're going to see an imaginary zone. You're going to say, okay, this zone is next to my stop loss. I'm going to move this bitch up to 15 pips. You move your stop loss up. Now, whenever you move your stop loss up, that's the end of it. That's the end of the trade. You have just crossed a insanity barrier right over here. And whenever you move a stop loss, I used to move my stops a lot too. I was way beyond the insanity barrier. So now I'm back. So you move your stop loss, right? Price moves up again, and you're like, okay, so I'm gonna wait for the fucking. Let's say you took this trade on 1 hour time frame or the 30-minute, and you start looking at the daily, and you're like, okay, I'm gonna wait for the daily candle to close. So you move your stop loss higher, looking at the daily time frame, to 25 pips. You're like, all right, so now we have a 25 pip stop loss, right? So now, some people who are more disciplined than others, they'll close at 25 pips. But some people who are not disciplined, they're going to say, yo, okay, huddle. I'm a swing trader. Started off with a scalp of 10 pips down over here, and now we're a swing trader, 35 pips. Or no stop loss. Fuck, remove stop losses. That's how your stop gets worse, right? Take a note. Yeah, swing trader too. Like you just, the point is you can't move your stops. You just cannot move your stops, right? So, and okay, so there are only 2 reasons why these losses get worse, right? One was like moving your stops. Make a note of that. Never move your stops. The second one is, this is really important. Second one is overtrading, right? And I think most people look overtrading from a very different, well, like, it's like a good perspective, but I think there's another perspective you can look at overtrading with, is like, let's say that OT is overtrading, because I have a mouse. I'm just going to wish I had a pen. So OT is overtrading. So what's overtrading in your perspective, right? Overtrading is, I took 10 trades a day. That's overtrading. Or I took 15 trades a day. Is that overtrading? Or I did 5 trades a day, right? So some people will say, okay, this is overtrading. Yes, someone said revenge trading. This, if you took 15 trades a day based on what you are really following, then I think that's on the borderline of being fine. It's not totally fine, but it's like, meh, it's okay. But like, the thing is, the most important factor is that some people do revenge trading. That's even worse, revenge trading, right? So let's take this for an example, right? Let's take this for an example. So you are scalping, right? You see a 1 hour candle. You see a 1 hour candle. You see this 1 hour candle, and then you're like, okay, now this 1 hour candle just started, okay? This 1 hour candle just started. So now you're like, okay, the trend is up, right? The trend is up. And what you do is you're like, okay, this is going to go up. So when our candle starts, you take a buy, right? You take a buy, it goes into a little bit of a drawdown, and then it starts to go a little bit lower. It starts to go a little bit lower. Now, how many people would close their buys and take sells? Because it has reached a minor support and it's about to break. It seems like it's about to break. You close your buys and you take sells. You're like, oh, fuck, this is a sell. I'm going to take sell. Happens, right? And then what happens? And then price starts to retrace. Price starts to retrace, and you figure out, oh shit, this is a buy, not a sell. Oh my God. So you close the sell, and then you take a buy. Right? Now price starts to go up. Price is heading up, it heads up, right? It goes to your break even, and it starts to go higher, and you're like, okay, perfect. It's a buy. It starts to go higher, right? And now what you're starting to do is you're like, okay, you know what? We're going to go in profits and whatever. Now the 1 hour candle has still not closed, right? So sometimes what this volatility happens and stuff happens, you close your buys, you take sells, right? I'd say 70% of the time people would change their biases. The thing is, like, you cannot change your bias 4 or 5 times within one hour candle. That's when you do revenge trading. That's when you really overtrade, right? Because you're changing your bias 4 or 5 times within one hour candle. People do this. Look at your trading history. Sometimes when I look at my trading history, I've done that too, right? You just can't change your bias over and over again. It's just bad for business, because what's happening? You're paying commission. You're giving away losing trades once, twice, thrice, maybe 4 times. So the thing is, when you find yourself not being like confident, just take one or 2 chances and that's it. Then just close the trade and wait for the 1 hour candle to close. Right? Exactly. Like when you mentally know that, okay, I just took a buy, I closed my buy, and now I took a sell, and now I've closed my sell, and I'm about to take a buy. Stop. That's madness. Can't do that. That's just stupid. You can't change your bias. Right? So I always tell people, have one bias for every 4 hour candle. Make notes. So you just need to have like one bias, and that's going to help you a lot, because when you have one bias, what's going to happen? Even if that bias is wrong and you hit your stop loss, perfect, fine. You had one loss. You didn't close once, twice, and thrice. You just had one loss. Perfect. Okay. Now we're going to wait for this 1 hour to close, or the next one, and then look for a better trade. Right? If you do that, your losses are going to minimize. 60% people will not do that. 60% people will just remember this. They're like, okay, perfect. And next week they're gonna start doing the same shit over again. It's gonna happen. Trust me. If you want to bet, if someone wants to bet with 1 to 5 odds, perfect. It's gonna happen. Yeah. So exactly. So someone said when you change your bias, it fucks with your mentality. Yeah, so what you need to do is you just need to stay out of it, man. That's too bad. So let's look here. So does a loss means that you're stupid? Tell me. Is that what the loss means? Does a loss mean like when you take a loss and then you take another loss and then you take another loss? Like, does that mean that you're stupid? That does not mean you're stupid. Because every one of you can like the idea is that you need to protect yourself from yourself. That you are your biggest enemy, right? Because what happens is that when you take a loss and then you take another trade, you take another loss, you take another trade, you take another loss. So what happens now mentally? What's happening is that your mind is getting a little numb to all those losses, right? Because now you get to a point where it doesn't make any sense. That's what happens. Because you take a buy, you're like, okay, it's not a buy, it's a sell. You take a sell without no rhyme or reason. You close that sell, you take a buy. Right? That doesn't mean you're stupid. That means that you're not thinking logically. You're not being rational about things. Right? Because the thing is, the market is going to do whatever the fuck it wants to do. Right? Because now you need to say, okay, so I tried once, it didn't happen. Let's just calm down. Let's just wait. And then you tried twice and it didn't happen. So let's just calm down and just relax and just let's look at it like a man, let's be reasonable and let's look at the chart again and not just let's just wait, because you get paid to wait. Make a note of that. You get paid to wait. I think Alex said that first. Alex the Tandos, I don't know. I think he did. But yeah, like you get paid to wait, because if you took one loss, if you're a really patient trader, you took one loss, now you're waiting for an hour to close. You're like, okay, you know what? I just have to reevaluate. Like, I'm not stupid, but there's something I missed, so I just have to reevaluate. So now I'm just gonna wait for an hour. It doesn't mean you're stupid. It just means that you're not handling yourself, and you need to handle yourself. You need to put yourself in check. Right? You need to say, okay, why? Okay, listen, I gotta relax. I have two personalities. I think I have two personalities. One is called Rakil and the other one is called Raja Banks. This is Raja here, because Rakil, he doesn't have the confidence. He doesn't have the confidence to run webinars or to come on Twitch and do trades. But when Raja is here, Raja knows how to get shit done. Right? So that's why when you sometimes see on Twitch, there are like a couple losses, that's Rakil, that's not Raja. So when Raja comes, Raja just wants to just like relax, lay back and be like, okay, you know what, we just gotta wait. Oh yeah, that's Raja. All right. So now when you take a loss, right, what happens? Like you start looking at things like, oh man, this fucking price was at support. Why did I take a loss? I took a buy, they say buy support. Why did I take a loss? Because there's a probability of things. There's a probability that if price is at a higher time frame support, let's say 1 hour, if you're scalping, 1 hour is pretty good. If that's 1 hour support, there's an 80% chance. If it's not 80, if 80 is too high, I would say there's a 70% chance. Please take notes of this, please. I beg you. Because people ask me stupid questions. Yeah, there is such things as stupid questions. People, they say there's no such thing as stupid questions. They haven't heard stupid questions. Okay. So there's a 70% chance that price is going to bounce from here, right? 70% chance. So if this breaks, that's just the probability of it breaking. That's just the probability of it not working. Like, you can't say. Also, there was something you missed at support. We're gonna talk about that later. We're gonna do a simulation as well. I think for like half hour or something. So we're gonna try to take some losses, and then we're gonna try to analyze those losses and see why, how we could have made this better, right? So it's not like the market hates you or you're bad. It's just like there's something you missed, because at first, you're at support, so naturally you're gonna say, yeah, like buy support. But when you look at the small time frames, there are some things that you might have missed, which you only find out later on, because like everything's great in hindsight, right? Everything's great and makes sense when you look at it after like 2-3 hours. It makes sense, right? But that's the thing, right? So you must have missed something. So I think that's very, very important. Oh, we have 181 viewers on Twitch. I said we're gonna reach 200. Oh, 185. Okay, right? So market doesn't hate you. You probably missed something, because people always say, oh, like price was at support, price was at resistance, or let's say that you took a, oh shit, yeah. Or let's say that you took a sell, and let's say you took a, okay, let's draw a new one. Let's say you took a buy, like, and price was in bearish trend, and it broke support, hit your stop loss, and you're crying about, oh man, but the daily was bullish, right? And I still took a loss. The candle were bearish. Why did it happen? This and that. You start asking all these questions, and do you think that helps you? Do you think that really helps you? What does that make you into? That makes you into a complainer, right? Yeah. So someone asked that if you got a stop loss because entry too early. Here's the thing about having a stop loss, saying that you have an early entry. Here's the thing about that. Let me just get on that context. An early entry means, and you got stopped out. Okay, so let's say you took an early entry and you got stopped. Price is coming down. You see the support. Price is coming down, and you're like, okay, I'm gonna buy. Boom, you take a buy. Okay, you take a buy. And this is your zone right over here, and you have just taken a buy right here, and your stop is 10 pips right over here. So what's gonna happen? Will this stop get wasted? Fuck yeah, it's gonna get wasted. It's gonna get wasted. Come back in the zone. And what's going to happen? It's going to come back in the zone. You got stopped out from buys here. What you're going to do? You're going to see it coming down. You're going to take sells. You're like, oh boy, we're coming down. This candle is bearish. It's going to break this zone. You take a sell. And what happens? You become the wick, because it's at support and goes up. And before you realize it's a buy, you close your sell over here. And then you take a buy. You're like, fuck yeah, we're going up. And what happens? It starts to retrace a little bit. Become the wick again. Has this ever happened to you? I'm pretty sure it has happened to you, man. This happens to everybody. Fuck. When you're starting trading, this happens to you. You become wick multiple times. That's like double penetration for a new trader. It's like the market double. It's not like the market's doing that. It's you. You're double penetrating yourself, right? Because now you're asking questions like, because if you take a buy, if you took a buy right over here and it retraced and hit your stop, because your stop was now above the zone again, you're going to say, oh man, but this candle was fucking bullish. This candle was bullish. It should have gone up. So, because now you're not thinking logically, you're just saying, but it was bullish, should have gone up, man, crying like a child, like this is complaining. This is not studying your losses or learning from your losses. That's fucking complaining. Right? So we're going to look at the opposite of that. Like how can you, make it opposite? So we're going to look at that. We're going to look at that after I have a sip of coffee. This is Nescafe coffee. Nescafe 2-minute coffee. Okay. All right. So what can we learn from a loss? I forgot I even had this point at the bottom here. What can we learn from a loss, right? So what we're going to learn from losses is what we're going to see in the next slide, right? That what you should be doing to learn from a loss. So what you got to do is you got to visualize your loss to a win. It sounds pretty stupid, but it's a thing. It's a legit thing. You know, you got to visualize a loss to a win because 70% of the time I'm just visualizing candles moving, right? Because you gotta look at it this way. When you have MT4, right? When you have MT4 or MT5 or whatever, you know, and you're seeing candles form, those candles are for retail traders, right? Those candles are for retail traders. Institutions and banks, they look at price. They don't give a fuck about candles or bars or line charts. They don't care. They just look at price. They want certain prices, they take certain prices, and there are certain levels they want to go to, right? We see candles, and we are supposed to trade from candles. And that's a fact, right? So you can always visualize candles. Hey, man, if you visualize a 4-hour bullish candle, that's a lot of pips. That's just it. Just gotta visualize candles. We're not gonna talk about visualizing candles because that's not what the webinar is about. It's about gaps and taking losses. All right. So when you take a loss, you gotta ask these questions, right? The first question you gotta ask is, why was I wrong? Right? If you took a sell, okay, because like if you took a trade, we're gonna look at examples here like soon. I hope you're not in a rush. Okay, perfect. I hope no one's in a rush. I'm not in a rush. So if you have support, right, and it, actually we've talked about support a lot. Let's talk about resistance. So price goes to resistance, right? It goes up, and then it comes down, and then it just comes down. And when it breaks up, you take a buy as a retest, right? So now you got to ask yourself a question. Okay, why was I wrong? Why did it go down? You know, you can't say, okay, you know, but it was a retest here, you know, fucking, it should have gone up, trend is bullish, blah, blah, blah. You know, no, that's not going to help you at all. That's not going to help you. You got to dive down in this chart and you got to see that, okay, how was this a sell? You know, why was this not a retest? Why did this retest not happen? Okay, how could I have taken a sell? Right? That's what you got to keep asking yourself. Okay, like if you had sells, you know, and you got stopped out, you got to say that, okay, how could I have taken a buy? How was this a buy? Right? Because hey, if I would have taken a buy, I would have had a profitable trade. Because it doesn't matter if price was going down. It doesn't matter what I think. You know, price went its way, and how could I have been on that right side? You got to forget about like, you know, why you took that loss. You got to start thinking, okay, how could I have been on the right side? That's a very important mind shift you have to make. These new things I come up with, man, these fake outs, these fucking gladiator candles, all this bullshit, it comes from analyzing losses and seeing like, okay, how could I have been on this right side? And I just make up these stupid names. That's all I do. That's all I do all day, you know. Let's look at this next one here. Yeah, see? So how was this the right trade? Right? You got to start looking at it that way. That how could you have seen things differently? If you go in the smaller time frames or is that on the high time frames, you had to look at it from the right perspective because you were wrong. It doesn't matter why you were wrong. You were just wrong because market is always right. Market is always right. Remember that. Market doesn't owe you nothing because market is always right. When people message me saying, "But bro, we have support here," I just don't know how to answer that, because yeah, of course you have support here. Market did what it had to do. Market's always right, and you gotta see how can you be on the right side. That's what you got to start working towards. How can you be on the right side all the time? And when you start working towards that, you start to minimize your losses and you start to adapt patience. Make sense? Because market is always going to do what it has to do, be it news, let's say news is positive and price drops. This market just knows you can't fuck with the market, man. You can't complain. You can't complain that, yo, but you were bullish, how can you go bearish? You can't do that, because it's always going to do what it has to do. You just have to put yourself in a position that you can say, okay, I'm not going to say, but I'm going to say, okay, how could I have been on the right side? Thanks for saying that. Can you put those exact words on your IG page? Oh, I forgot what I said. Can you just message her again so I know? Fuck, man. Can you talk about lack of discipline? Yeah. When you have lack of discipline, you start to get disciplined. Come on. It's like when you go to the gym, right? You go to lose weight. So the gym guy tells you, hey man, just eat healthy. Eat healthy, and what's gonna happen is when you eat healthy, you're gonna lose weight. But if you don't eat healthy, you're not going to lose weight. You're still going to be fat. So it's your discipline that you eat healthy and you lose weight. Same thing with trading. You don't take too many trades and your account stays healthy. You take too many trades, your account takes a beating. Yeah. Because the market's always right? You probably missed something. So what did you miss? That's what you got to see. Right? Let's go to the next one. Take notes. Yes, take notes. So we're going to look at some examples, right? We're going to look at, I'm going to take like a 2-3 minute break, but we're going to do some simulation here, and we're going to try to take some losses, and then we're going to try to learn from those losses the correct way. We're going to see, someone asked the question, Raja, when is the best time to enter? I'm going to let everyone deal with that. Everyone else deal with that. I'm not going to answer. When's the best? Okay, I'm going to answer that, because then, someone's going to say Raja, an asshole. Okay. Best time to enter is at zones, because look at it this way. You have support. Let me just draw support. You have support and you have resistance. Okay. Now, let's take a look at this. So now price is coming down, Now, when price is coming down, you got to tell yourself, okay, where will I place my stop loss? Okay, if price is coming down, where are you going to put your stop loss? You're probably going to put your stop loss below the zone, right? Below the zone, you're going to put your stop loss. So now you got to measure how many pips of a stop loss do I want, right? So I want examples here from everyone here. How many pips are your stop losses? Like, what's like an okay stop loss for you guys? 10. Oh, some said 20. 43 pips. You're trading USD ZAR? 30 pips. Okay. Oh, nice. 10 to 50 pips. Someone said 10 to 50 pips. Brother, you got to relax on that 10 to 50 range. 10 to 50 is a big fucking range. Right? That's a big fucking range. So now, okay, so check this out. Right? So let's say this is a 1 hour time frame. Okay? Check this out. This is going to save your life, hopefully. This is a 1 hour time frame. And you're like, okay, so I got to place my stop below this zone, and my stop loss should be, let's say you say my stop loss should be 10 pips. So now you measure 10 pips. You're measuring 10 pips and you're like, oh, 10 pips is right over here. Okay, perfect. So now when will you enter? Will you enter over here, or will you enter when price comes down here? Obviously, you're going to enter when price comes down here, right? Because if price comes down here, you take a buy. Now your stop is 10 pips and it's below the zone. Right? So now you're following your plan. Now, this is like you're following your risk plan now. Right? So now your stop loss is below the zone and it's 10 pips and you have a nice entry. Right? If you're saying, okay, you want like a 7 pip stop loss, so then what are you doing? You're waiting for price to maybe come down over here. You take a buy, your stop is below the zone, because if price breaks below the zone, it's going to take you out and then it's going to continue moving down, right? If it's like theoretically speaking. So this is very, very important, right? Also, it depends on the time frames you're looking at. So now let's say this is your 4-hour time frame, or let's say this is your daily. Okay, let's talk about swing trading. Let's say this is your daily time frame. Where is my pen? There is daily time frame. Oh, someone said good morning. Good morning, Vietnam. Their morning just started. All right, let's say this is a daily time frame, and you're saying that your stop loss is going to be 20 to 30 pips, right? So your stop loss is below. Now daily zones are bigger zones. Okay, let's just understand that let's say if a 1 hour zone is like 6-7 pips, daily zone can be like 20 pips, 15 pips, right? So you're like, okay, I'm going to place a stop loss below the daily zone and my stop is going to be 25 pips. You're going to measure 25 pips. You're like, okay, 25 pips right over here. So when price comes here, I'm probably going to put a buy limit so that this gets activated and I'm trading my plan, because stop is below the zone. It's 20 pips, 30, whatever, right? Same thing goes for sells too. Right? Your stops are here. But if your stop is, let's say you're saying, okay, I'm gonna enter right over here and have a 25 pip stop over here in the zone, that's gonna get hit too, because it's still in the zone, right? It's still in the zone. Someone's sound keep cutting out. Oh, just gotta fix your speakers. Someone asked me the question. How do you know it will not break that zone? You don't know. That's $1 million question. If people knew that zones will 100% not get break, everyone's going to be fucking rich. You don't know if it's going to break or not. You just don't know. You just go off probabilities, right? That if a zone breaks, hey, there was a chance it's going to break. What do we talk about? That's going to be 70 to 80% chance that at least a 1 hour zone and higher are gonna, price is gonna bounce. That's just a probability. That's the probability of anything in life. You go out to drive. How do you know you're not gonna get hit? How do you know that? You don't know that. Someone can hit you. That's why you got seatbelts and brakes and red lights and stop signs. Right? Same thing over here. There's a probability. So same thing as like if you drive down a one-way street, if you go down the opposite way, what's the probability you're going to get hit? That's like an early entry on charts. You take an early entry and you have a stop loss above the zone here, there's a probability it's going to get fucking stopped out. If you go opposite way on the one-way street, there's a probability you're going to get hit. High probability. Or if you go the right way, there's very, very low probability. Right? Same thing here. If your stop is below the zone, there's a probability it's not going to get hit. There's a high probability it's not going to get hit. That's the thing. If you aren't winning 90% of your trades, there are no such thing as there's no such thing as a mental stop loss, man. Like Ted just mentioned it. There's no such thing as a mental stop loss. If you think you have a mental stop loss, man, like good luck. Mental stop loss doesn't work, because when you have a mental stop loss, right? Okay, Let's see what happens when you have a mental stop loss. Okay, let's just talk about mental stop losses. You have a mental stop loss. Okay, you're like you say, every morning you wake up, you can be able to say, "Yay, man, I'm a good fucking trader. Fuck yeah, let's go trade." Okay, so you come to your trading station. You come to your trading station, and price is coming down. You take a buy here. All right, we got a buy over here. And price is coming down. It goes below the zone, and you're like, okay, yeah, I got a mental stop loss. I'm just gonna mentally move my stop down to a bottom zone here. It comes down, and it goes up. It goes up. You're like, okay, perfect. I got a mental stop. I'm a good trader. I have patience. I'm going to wait for price to come up to break even, and then I'm going to close because you got a mental stop loss. What happens? Price comes down here again, and you're like, oh, okay. You know what? I'm just going to probably hold just a little bit. And if it's a trending pair, let's say gold or GJ, it's going to fucking shoot down. And you're like, oh, shit. That's what happens to mental stop losses. And you're like, oh man, why? The candle was bullish. Why did I fucking take a loss? Oh, candle was bullish. We had support. We had this. We had that. That wouldn't help you. But now when you look at it in a way that, okay, hey, wait a minute. It broke support. It bounced up. Now this support turned resistant. Interesting. So this is what happened, because market's always right? Market always right. Market always has a rhyme and reason. But since you had a mental stop loss, you didn't see the setup. So someone asked me a very stupid question. Would you recommend to always use a stop loss? I just don't know, man. Why? Fuck. So this is what happened here. That you did not see this. So now when you took that loss, now you're going to look at it in the way that, okay, how could I have been a winner? How could this may have been a winner? Right? So now you look at this way. Broker support came up. Oh, the support and resistance. This was a retest. Shit, it went down. So now you make a note that, okay, maybe next time I'm not going to have a mental stop loss because it broke support. And now I'm just going to wait because it broke support. It's going to come up for a retest because it happened the last time I had a mental stop loss and it fucked me. So now I learned my lesson. I'm just going to have a stop loss and wait for it to do a retest because it did that the last time. And now I can win the trade. Retest. Hey, Ted, you want to talk about some shit? Like, I'm just going to take like a 5-minute break here. You okay with that? Yeah, Ted. Hey, hello.
Hello.
Hey.
Hey. Yeah, I think it's funny because we talk a lot about the same things over and over again, and really trading from a retail standpoint is very basic. The reason why I say that is because there's only so much information we know as retail traders. Like if you notice what you are being educated with, what you sort of work with, everybody uses the same thing. Honestly, you haven't seen someone come into the online world and say, hey, I can show you an institutional panel where I can show you what we're doing today at Goldman Sachs. So, with that being said, everyone has access to the exact same information. It's how you apply this information and where your work ethic comes from. And once again, this is different than high school. This is different than university. I think a lot of people, and I've said this before, skated through school, skated through university. There was no effort required. I went through university. You could literally copy off your neighbor or get last year's term papers or do whatever you need to do and never have a problem and pass university and you're done. You can go work at a job every day and you can just passively sit there and spin around in your chair all day and you'll probably keep getting paid. Uh, this is the first, unless you're like a champion bodybuilder or a professional athlete, this is probably the first real test you've had in your life. And I think this is the reason why people don't understand the effort that's required to get into this. And every time you're working in this, and especially when you're younger, you haven't experienced a lot of life's ups and downs yet. Like you haven't been really put to the test. And what I mean is you're back to the wall, like literally making life decisions. If you live at home, you're never going to have a problem, right? Your parents are always going to give you a meal. Go start with zero on the street and see if you can go from being homeless to having a home, right? That means getting a job, finding a place to live, being able to budget, doing all these different things. You'll suddenly realize how hard it is, because it's the same reason why kids come back from university, they go back to their parents' house, because it's a safety place, right? You don't have to exert effort, you don't have to be scared of things. So now when you look at trading and you say, well, I want to become a good trader, I want to make money, you toss your $100 into your account, your $500 into your account, and now it's the real world. Like there's no one to copy off of, there's nobody to turn around and say, well, everyone, let's take gold buys today. And you enter in the gold buy at like 12:05 and you close at 12:07, and now you're done for the day, right? There's no way that anybody can do that. And now you're coming to the realization that your life sucks. But that's okay though, because now what you're starting to realize is you're learning the mental threshold about yourself. You're understanding what your limit is, and now you as a person now have to build out that limit. And what I mean by that is you sit around and you get frustrated, and everyone's a scam, everybody's this, I hate Ted, I hate Raquel, I hate whoever. That's acceptable. You're gonna hate us because of the fact that we're the first people that have actually come into your life and said, hey, this shit's hard, we're here beside you, but I can't tell you when to take a trade. I can't tell you how to control discipline. I can't tell you how to control your emotions. Like, what do you want me to do? Every time that you overtrade, you want me to come to your house and cut your finger off? Like that, because that's literally what you are asking me to do. You are literally asking me to discipline you when you make a mistake. And you're telling me that you do not have enough discipline in your body to understand that throwing away $100 every day, or $500 every 2 days, or $1,000 every 3 days, you do not have enough discipline to understand the value of that money. You will understand the value of that money when you have no more money left. And then you look back at your trading account and you'll say, wow, I just blew like 15,000 or 20,000 trading, when I could have traded demo for 6 months and taken my time, or I could have traded penny lots and taken my time. You're going to realize that. And it's like a bad relationship. You only realize how bad it was once you're out of it. So if you want us to kick your ass every day, I will. And I tell people all the time, you're making the same mistakes, but it's up to you to consciously believe that I either want to do this and I want to be successful, or this is just a game for me and I'm just willing to gamble. And if I'm willing to gamble, I just need to go to the casino and I don't have to really worry about anything else. I'll go play blackjack, make $500, and I'll leave. You have to put everything into perspective. And like I've told people, this is the hardest thing you're ever going to do in your life. And if you don't believe that, if you think I'm joking, sit in front of the markets when there's unexpected news and you don't have a stop loss and watch your account blow. Sit there for 3 hours at a time and then shut your computer down. And then on the fourth hour, the market moves like crazy and it would have moved to where you thought it was supposed to go. So, this is where mentally you have to be strong and you have to understand that this is a grind every single day. Not every day is a trade. Even though everybody around you, and it's funny because I know exactly what you're all thinking. I think the same thing too. I sit here and we're in the Twitch webinar every day and we all take trades and everyone goes around takes trades. Oh, buy here, sell there. Oh, look at this. Oh, it's going up, going down. Then you go on social media. Oh, I just took like $1 million trade here. Oh, I just stacked 20 positions there. You have so many people telling you how good they did, and then you're sitting there in your basement or in your room, in a closet, wherever the hell you're sitting, and you're looking at your charts going, I can't find a trade. What am I doing wrong? But you're not doing anything wrong. That's the point. You're not doing anything wrong because you haven't risked anything, you haven't lost any money, you haven't done anything wrong. It's almost like the world could be blowing up around you, but if you're underneath a rock and you're protected, who cares what's going on around you? And that's exactly how you have to have the mentality. It's like when I sit on the Twitch feed, I take trades. I can show everyone my trades. I show them now regularly just because I want people to see, that trading is exactly what it is. It's not every day. I took like maybe 10 trades this week. I took two gold trades yesterday. I spoke about the gold trades, and then I hear everyone else looking at GJ, EJ, UJ. Everyone's taking wins. You know what? Those charts didn't even cross my mind because I had an idea in my head. I liked my gold trades. I said where gold was going to go. Gold went to where it was. I even got out early. I closed my trades early. It went to where exactly where I said it was going to go, but it didn't bother me because the whole idea in my head was I successful today? Did I take a trade where I profited? But more importantly, did I take a trade where I looked at the charts? I understood where the market was going and I was able to understand and accurately make a good decision on my end. Whether it was a good decision to take a trade or whether it was a good decision not to take a trade. That is going to be your overall consciousness, and that is how you have to approach the market every single day. Sitting here for webinars, sitting here on Twitch feed, trying to analyze trades is not always going to be the best thing for you. It's you know what? There might be a day where you don't see anything in the market. Close the market, close your charts down, go watch TV. Don't get into the Twitch feed. Don't sit there and feel that you have to force a trade because these concepts that we're talking about right now, where to place a stop loss, where to take profit, what to do with a gap trade, that stuff can be totally irrelevant if you just focus on yourself and you understand your limitations and you understand on either accepting those limitations that you've reached the peak of your performance and now you just have to be consistent, or if you believe that your limitations can be broken, how do I go about doing that? What are the small steps that I need to go and do that? Because going to the gym, if you're 250 pounds or 300 pounds and you expect to lose 100 pounds in a week, you're not going to be able to do it. But if you say, hey, I can lose 5 pounds a week, maybe that's more acceptable so that you're on a course now that I could lose maybe 10, 12 pounds a month. And by the end of the year, I've lost 100 pounds.
Yeah, awesome. No, that's right. So what we're gonna do here? Oh, nice, perfect, Ted. Thank you so much. Words of wisdom by the oldest person here in the webinar. Okay, so those of you wondering, yes, perfect. See you tonight. I'll be there by like 9:30, 9:15. I'll get the seats. So those of you wondering, this is the simulator, right? This is the website. You go here, you go to the website to get the simulator. So what we're going to do here now is, this is the Zoom chat here. Okay, we're going to start a simulation here. Let's see here. So, what year should we go? No, years are going to be 2018. No doubt. What's happening here? Ooh, your JPY. Okay, what month? What month, my Zoom people? Tell me the month. So this is where you choose the months. These are your providers here. So you choose the providers just from here. Oh, someone said January, someone said November, someone said January, someone said, okay, let's go to November. Oh, June, February. Okay, let's go to June. Let's go to June. Okay, June the 10th, 11th, 17th, 24th. 17th, perfect. 17th, June 17th. And then this is where you choose the timings on this simulator. You choose your times right over here. And then this is your leverage. And this is your days. You set your dates from here. All right. You start simulation. So what we're going to do is we're just going to, oh my God, the virus. No. Oh, fuck, where did it go? There's a chart. What happened? Close this. What happened to simulation? Control W. What would that do? It's not going to do anything. We'll have to restart. Oh, well. Is we're going to go to our session time. So let's say we're going to go to our 6 a.m. Eastern, right? So from this, you can choose your time frames here. See the 1 hour. So this is the time here. This is 5 p.m. Eastern. So we're going to go to 6 p.m. Eastern. So this is your London Open. London is 3, 4, 5, 6. This is your 6 a.m. Eastern. So what we're doing now is, okay, so now what do we do to analyze first, right? What's the first step that we do to analyze? We make sure that we have support and resistance. Make sense? So what I really recommend people to do is go to the 4-hour charts, and then you're trying to see, okay, where is your support, right? I guess support's right over here, down over here. And then you try to see, okay, where can be resistance? Resistance can be right over here, right? The previous 4-hour close. So how I identify that on the 4-hour charts is that it's always at the previous open and close, right? So it opened right over here. So this would be a resistance. This would be your support. Plus, if you look left, you got support here as well, right? 6 a.m. Eastern. And now you go to the 1 hour. So actually what you can do is you can actually copy these support resistance lines on the 1 hour as well, right? So here we go. So you got the 1 hour resistance, and then you got the 1 hour support. So what's going to happen here? Let's look at 30 minutes like this. Doesn't make so. Let's look on the 4 hour. It's going up. Let's look on the daily. Daily is trying to head down. 1 hour. So now, basically, what you're going to do is, if you're looking for buys, right? You're basically looking for buys down over here, right? So now, what you got to do, you got to look at this 1 hour candle, and you got to say that, okay, if this 1 hour candle, you got to see, okay, if you take a buy, first of all, where is your stop loss going to be? Right? Your stop loss is going to be below this 1 hour candle, which is right over here. So how big should your stop loss be? 10 pips. So you got to measure 10 pips. It's right over here. So you can take a buy if price comes down to 146.409 or somewhere down over here. So let's draw a shaded area. And let's say this is the area where we would be comfortable taking a buy. Make sense? Because the 1 hour is bullish, 30 minutes is bearish, so the 1 hour is bullish. So this should head up as long until price stays above this 1 hour candle. Make sense? So what are we going to do? We're going to allot our risk. So we're going to use 1% risk on a 10 pip stop. Make sense? The daily looks like this, right? So we're just for the sake of examples, we're going to do this. And then what we're going to do is, and then we're going to look at it as like, okay, like, what, how could this spin out? If we lose this trade, we're going to start looking to see how could this been a fucking winner. Okay, makes sense? This simulation is not to win. This simulation is to teach you how you should do your, how do you analyze your losses? So just relax. You know what I'm saying? It's coming down. Right? Also look at the time, right? Also look at the time. Look how many minutes are passing here. So we're looking at the time. Oh, there was nothing. Right? Don't worry. We're going to look at everything. For now, we were just looking for a buy if price came down here so that we could have had like a nice stop loss. Right? But what happened here? We missed this trade. Right? That's okay. The 30-minute candle is about to close, and we're going to look at it. 30-minute candle closing right now. And right there. We got the 30-minute candle close. Okay. So now 30-minute candle close. So now what we're going to see is that, okay, why did it not come all the way down, right? Because now look at this. Look at the way it moved. It moved 17 pips, right? So now you're not saying that, fuck man, like I missed my trade, blah blah, like I waited and waited and now I've missed my trade. It's not about that. It's about how could you have taken this buy? Make sense? Because you missed it and someone was in it. And then you could have taken this buy. So now you got to look at yourself and see that, okay, how could I have taken this buy? So now we're going to look at that. Like, how could you have taken this buy, right? So let's go to the 30-minute, right? You have the 30-minute, and now you're looking to see that, okay, you know what? Maybe, hey, look at this. This must have been a booby trap candle, right? And it reversed. But now what you also find is that, okay, does this make sense now? Does this make sense right over here? Right? Does this make sense? Now let's go to the 15-minute time frame, smaller time frame, so we see more information. Oh, okay. This makes much more sense now, because now if we tell a story on the 15-minute, that okay, price came up, kind of like we had this exhaustion up there and down, and this 14 EMA was kind of like trailing it. So maybe hey, this made sense here in this time. So now you make notes that okay, you know what? 30-minute candle close here. There was kind of like support. Momentum was up since price was bouncing from a 1 hour support. So hey, maybe the 4 hour was bouncing from a strong 4 hour zone. So this had to go all the way up to the zone. Does that make sense? Or what you say is that, oh man, I was looking for a buy and fucking this thing should have came down, and no, you're not looking at that like that. You're looking at it like okay, how could I have been in this buy? So now you make notes. You're like, okay, perfect. Right? Perfect. So this was support here. This was like a higher low price made to continue moving up. Make sense? So now what's happening? Now we're reaching a 1 hour resistance, right? So far we haven't taken a trade, right? We're reaching a 1 hour resistance here. So what do we do? What do we do? Do we sell right here, or do we wait for this 1 hour candle to close? Right? Because if you're saying that you have to wait for the 1 hour candle to close, okay, what's going to happen? Maybe price can reverse, right? But now what you got to do is, if you are aggressive, right? Let's talk about those aggressive traders who don't want to wait and shit like that, right? If you're an aggressive trader, maybe you're looking, if you're looking to sell, so what do? You got to see where your stop loss is going to be, right? Once again, you got to see where your stop loss is going to be. So your stop loss is probably going to be above, like maybe your stop loss is going to be right over here, 146,690. That's where your stop loss is. And now you got to measure how big your stop loss should be. If you take a sell here, your stop loss is going to be 7 pips. Or if you take a sell over here, your stop loss is going to be like 4 pips, right? So is this like a good stop area? I think it is, right? So we take a sell, and this is for all those aggressive traders. If this breaks the zone and goes up, we're going to look to see why and why things happen, right? So that's what we're going to do. So it's just going, right? Because when you take losses, you always got to look at it from a fact that, okay, how could I have made a better trade or whatever. So see here, we predetermined our risk, right? We predetermined our risk. And what did we learn from this trade? This trade was that, okay, this is a 1 hour resistance, right? So now, what are the chances that the 1 hour resistance is going to get respected? What's the chances? 60 to 70% chance? I'd say 60 to 70% chance it's going to get respected, right? So what do? We close this. We took one trade, or if you want to put it at break even, whatever, right? But now what you're doing is you're looking to see that, okay, this is, okay, so let me just make this one note, right? Okay, so I want everyone to make this note here. I'm going to write it here. I want everyone to make this note. This note is 1 hour support resistance. Best. Let me just do this. 4 hour support resistance. The best. 1 hour support resistance best. And 30-minute support resistance better. Right? I personally use the 30-minute support resistance for, like, scalping, because I find that the 30-minute support resistance is stronger than the 15-minute one, because I see some people use the 15-minute support resistance, but that's fine. But here's what, right? Here's what. The thing is, if you're looking at the 15-minute time frame, what's happening? On the 15-minute time frame, you see more setups. If I'm right, just say yes. Just say why. Let's say why. On 15-minute, you see more setups than you see on the 1 hour time frame or the 30-minute time frame. That's just a fact, right? You see a lot of setups. Now, when you look on the 5-minute time frame, you see a lot more setups than the 30-minute time frame and the 1 hour time frame, right? So what happens? So let's take an example, right? Let's say you buy a lot of stuff for cheap from China. Are they going to be good quality? No. What if you buy the same stuff from, let's say, a better brand from Europe? That's going to be good quality, right? That's going to be expensive, right? And you're probably not going to be able to buy a whole lot of it. Maybe you're going to be able to buy like 2 or 3 pieces, but they're going to be really good quality, right? Same thing happens in trading. So now please make note of this, that when you're looking at a small time frame, let's say the 5-minute time frame, you see a lot of setups. So when you see a lot of setups, they will not be good quality setups. Horrible fucking quality setups, right? But when you look on the 30-minute time frame setups, you're not going to find them all the time, but they're going to be good quality setups, right? So more setups equals low quality on 5-minute time frame, 15-minute time frame. Why? Because they're weak. They are weak confirmations and they can break easily, right? 30-minute, better. 1 hour is the best, right? 4 hour is the best, right? But you got to wait more. On the 1 hour, you got to wait more for a setup, but it's a good quality setup. 30-minute, you got to wait less, but it's still a good quality setup. 15-minute, you got to wait even more less, but it's not as good quality, right? So just keep that in mind. I have someone here in the group who waits for 30-minute candles to close, right? So we're gonna close this. So we're gonna close this here. So now what I was about to say is that, okay, 30-minute has found support and 30-minute has found resistance, right? So now you got to see, okay, how big is this range? This is an 80, 20 pip range, right? So now how confident are you that price is going to go all the way down here for 20 pips? Is that, what are the odds of that happening? More or less? Will this entire move happen like, will you be confident in this entire move, or will you be confident in like till here, quarter, maybe 3/4 of the way? I'd say 3/4 of the way, or maybe a half of the way. I'd like that 100% all day long, right? Because you got to put yourself in a position where you can have better. You can have like a better chance of grabbing some pips, because if this is 20 pips, there's a very less chance. Well, I won't say very less. There's like 45% chance or 50% chance it's going to go all the way down, but there's a 70 to 80% chance it's going to go at least half of the way. And and then that's when you let one run. So we're going to wait for this candles to close. The 15-minute candle is forming right now, and then we're going to wait for this 30-minute candle to close, right? So now we're going to wait for this 30-minute to close, and we're going to go forward. Let's go forward 30 minutes. So now see, we are down at support. So now what do you do over here? The 1 hour closed like this. What do you do? What do you do here? How confident would you be in a buy right here? How confident would you be? Who wants to take a buy? Who wants to take a sell? Like right now, right at this very moment. Looking on the 15-minute. Buy, sell, buy, sell. Let's look at the 4 hour. Look at this 4 hour. Buy with 5 pip stop loss. Why? The thing is, you have to look for setups. Look at this setup right here. It broke resistance. No, it rejected resistance. And what was this? What was this move up? This move up was the first touch, right? First touch. That was the first touch. So you were more confident in taking sells. Now you have all these candles here. There's no trade. There's no trade. You got to understand that you have to look for visually appealing setups. Not because price is at a support or at a resistance. Are you dumb? You're waiting for visually appealing setups. This is not visually appealing at all, is it? Tell me. Just look at it again. Is this visually appealing? Of course, it can go down, but it's just not visually appealing. It's also at a 30-minute support. It's not appealing at all. So you wait. Yeah, exactly. You wait for something that makes sense to you. See, it's moving down, you take sells, and then guess what happens? I think it's going to do a retrace or whatever, but we wait for this 15-minute to close. See this? Look at this. He said, what do you do? Waiting. Is there any news? No, there's no news. You're just waiting and waiting and waiting and waiting, and 15-minute candle close. We look at the 5-minute. Oh, it's like this. We look at the 15-minute. It's coming down. But you have these supports here. You look at the 30-minute. You still have the supports here. So what? This was 10 pips. From support, it just fell 10 pips. So if you would have taken a buy over here, let's look at it this way, okay? If you would have taken a buy over here and you would have said, okay, we're at support, fuck yeah, let's buy support. So now you lost the trade, right? You lost the trade, but now you look on the smaller time frames. Let's look at the 15-minute time frame and see that how was this a sell? Make sense? It moved down, and remember, market is always going to do what it's going to do. It moved down. So how could you have been in a sell? How could you have gotten this sell? So let's look at it. Okay. Let's do this analysis here. How could this been a sell if you were looking at the smaller time frames? Okay. Now candles were coming down, and then this was 5-minute support. Oh fuck! This candle broke support, and then this went up for a retest. And then it came down. So you just, quietly make note of this. Oh, okay. This is why it went down. That's it. That's it. That's why it went down. There's no other reason why it went down. That's the only reason it went down. Make sense? This is how, and then when this happens, the next time it starts to happen, you remember this. You're like, oh, fuck, okay, I've seen this happen. So now I can take a sell. Right? Makes sense? So now what's going to happen? It broke support on the 30-minute. It broke support, but the candle hasn't closed. Candle hasn't closed, but it broke support. Right? Maybe 15 minutes is going to do a retest and then head down. So what do we do? If we're waiting for a retest, what do we do? Right? If you are trying to take a retest here, you're saying that, okay, maybe, I should have a stop somewhere up here, right? Somewhere up here. Your stop loss should be somewhere up here. So now you're measuring, okay, this is a stop I can have. So maybe you can sell over here and have a stop. 30-minute candle is about to close. So, we're just going to wait for the 30-minute candle to close and see what it does. And there we go. We have the 30-minute candle close like this. Let's look at the 1 hour. What's happening now? What's happening now? What's this? Should we wait for a retracement for a sell? Yeah, so let's wait. So now we got to see that, okay. So now as long as price stays below the previous 30-minute candle, it's good for sells. Yep, right there. So if it starts to go up, we're going to see, okay, what did we miss? Candles are forming. We're just waiting for candles to close. Okay. See this? Right? So 30-minute broke support. This candle broke support. And then we measured a stop loss. We measured to see, okay, how big is our stop? Okay, we can have a 10 pip stop. We're following a plan, right? We can have a 10 pip stop. And that's cool because on the 30-minute, see, better support resistance. So now 1 hour has broken the support. So now where it's going to go? What's the odds it's going to come way down over here? Right? So you close some position, let rest at break even, and you let it run. Right? You let it run. So now you don't know where it's going to go. You've just taken your profits of what you wanted to take, when you're scalping. So you're just letting it run. You don't care where it's going to go. We got 5 more minutes. 4 hour. It looks like 4 hour can come down to fill this wick really in the next hour. There we got the 1 hour close. Okay. See this retracement. Stopped out. So now what do you do? Now what do you do? What's the game plan now? Wait. Okay. Wait. Or look at the stop here. Look at the stop. Sell again? Yeah, you can sell again. You can sell again. But now you got to understand that, okay, it just look on the 30-minute, right? Look at this. So I wouldn't be too confident because if this is making a range here, this mini range, I'm like okay with this because we already took 2 trades. Do you set your stop loss amount based on the range of the zone? I just did this twice, Gonzo. But this is going to be recorded because I'm not going to answer any questions. I'm actually getting late for swimming class. So yeah, we're just going to sit one out, but their chances is going to go down because there's momentum and there's 1 hour resistance right over here, So we're just let's go to the next 15 minutes. Now the 15-minute has closed like this, so it should come down here. Let's go to the next 15-minute candle. Awesome. See, so now it's going to fill this range. So this again, it would have been a good trade, right? Because it was 1 hour support resistance. Makes sense. So now it's going to go further down. Look at this 30-minute. So now this is not a sell. Now, because if you missed this trade, you missed it. That's the thing, you missed it. So the sell was from up here, not from up. But this is not a sell, because now if you're taking a sell, you're risking a 20 pip stop. Because now look at this. You got to make sure price stays below that 30-minute candle. Even though it can go down, it's just good practice. Right? Let's go to the next 15-minute close. And let's go to see that. If you would have taken a sell, you would have gotten fucked in the ass. Let's go to the next 15-minute candle close. There we go. See? So now this was visually appealing here, right? This trade. This was visually appealing. Now, is this trade visually appealing? Look at this 1 hour. Is this visually appealing? Where's it going to go? We don't fucking know. It's not visually appealing at all. This is the new 4-hour candle, right? So it's just gotta wait. Just gotta wait. But anyway, I'm gonna go. I'm actually getting late here. I have to go attend to some activities. But I hope this was educational and you guys found some sort of value in this, because I did it from the depth of my heart. Okay. All right, everybody. Have a great Sunday. We'll see you